when we think about just medical expenses broadly speaking and a consumer's willingness to take more financial risk through their health benefits, you have to keep in mind that most households can't afford their deductible to begin with, or their total out-of-pocket cost. So this is a Kaiser study that shows the percentage of liquid financial assets relative to those two metrics, and it is pretty low. Only 76% can have liquid financial assets greater than their deductible limit, and then 61% can only cover their out-of-pocket expense. So should they get sick, should they not be able to contribute to their HSA for several years, they could run into some pretty, relative to these metrics, some pretty dire financial issues. And that kind of brings us to slide 44, which shows a survey that basically says 26% of all adults 18 to 64, privately insured population, are having some type of trouble paying their medicals to begin with. So those folks having trouble paying medical bills are probably not in a position to say that they're going to take on more financial risk going forward. So that kind of brings us into the whole concept of affordability, what the base looks like, and again, we don't think HSAs are 401ks, and a huge reason for that is that HSAs are transaction accounts, right? You see a remarkable, very high turnover. So 75% of HSA assets turn over each year, and that's because people are using it for their medical expenses. They don't naturally view it as a source of savings like you would with a 401k. Healthequity actually put a pretty good chart in their investor presentation that shows the mix of accounts by spending type. So 70% of all members are spenders, which means that they have an average account balance of $320, which is a fraction of the average balance of $1,600, and even smaller compared to savers and investors. Assuming that that trend continues, people viewing HSAs primarily as transaction vehicles to pay for medical expenses, I think that's going to weigh on the prospects for average account balance growth and the ultimate TAM and multiple that people will pay for the stock. And even so, even if you assume that investment assets is really the wave of, is really going to be the next leg of growth and incredibly valuable, something to keep in mind is that while those average account balances look really appealing, on the margin, it's coming from the investment accounts, which they only get 30 basis points on versus 172 basis points on cash assets.